Welcome to the Lean Out Your Business podcast, a show dedicated to helping entrepreneurs accelerate business growth and simplify success. I'm your host, Krista Grasso, and I've been working with businesses for more than 2 decades to help them lean out and optimize what's working while eliminating anything that's not adding value. So if you are ready to get more time back in your day, more profit in your business, and to do business differently, growing and scaling on your terms, let's dive into today's episode. Hello, and welcome to another episode of the Lean Out Your Business podcast. Today, I am super excited to be welcoming Danielle Hayden to the show. She is a reformed corporate CFO who is on a mission to help rule-breaking female entrepreneurs understand their numbers so they can gain the confidence needed to create sustainable profits. And that's a lot of what we're going to be talking about today. She spent more than 10 years in the boardroom as a corporate finance officer and has transitioned to now being the CEO of Kickstart Accounting, Inc., where she helps business owners with bookkeeping, financial analysis, education, and as the author of the Profit Planner book series. Danielle, welcome. I'm so excited that you're here today.
Oh, thank you for having me. There's nothing more than I love than having this conversation and being here with other podcast hosts. So thank you for having me.
Absolutely. And I'm all about helping people scale in simple, sustainable ways. So I really love that you're so focused on generating sustainable profits, because so often people are very revenue focused, but they don't take the time to really look at or understand what their profit is in their business. And you can't scale sustainably without those profits. So I'm excited to dive in for today's conversation.
Yes. Amen. Thank you for saying that. Every time somebody talks about revenue, it is like a dart to my heart. I'm like, oh, it doesn't matter. We need profits in order to stay in business. So I love your work.
Absolutely. I know. And every time we do this, because it's easier to track revenue than it is to track profit. So I get why people talk about revenue, but when you're setting those revenue numbers, are you considering your profit margin? Like if you want to make 100,000, but you only have a 50% profit margin, are you setting a $200,000 revenue target, or are you setting a $100,000 revenue target?
Yeah. All 100,000 are not created equal.
They are not. All right. So with that being said, why don't we just start with some of the basics of what are those most important kind of critical numbers that we should know and we should understand so we can make smart decisions in our business?
Yeah, I have 3 very specific numbers that I like to look at. You can find this information on your profit and loss by month in QuickBooks. Most other accounting softwares will have a similar report. So if you're in Xero or Wave, you can go to your profit and loss by month and pull this report for the last 12 months. Once you've pulled this report, I want you to have your eye on 3 specific numbers. It's your gross profit, which is revenue minus direct cost. Direct costs mean your inventory, your labor, whatever you need to purchase or pay for in order for your product to even get out the door. So you cannot perform your service or sell your product without these, goods or services or people. Not your operating, so not Zoom, not the operating expenses, right? But the very, very key things that you need in order to deliver your service. That is your gross profit. So you can find this on your income statement. It's the revenue minus cost of goods sold. And you can see right there the gross profit. And the reason I want you to pull this report for the last 12 months, because you can then look at the seasonality of your business. You can draw your attention to the divots, the times that you had dips and times that your gross profit increased, and you can start to analyze why, right? So that's the whole idea, is that we're using this information to reflect on our business. So first we have our gross profit. Next, we have our net profit. So you and I were just joking about net profit a few minutes ago. This is all the way at the bottom of the income statement. So run your income statement and draw your attention all the way to the bottom. And this is your profit or your loss by month. And you can do the same exercise here. If you lost money one month, you can scan that month's activity to find out why. what happened? What didn't work? Or what were you doing to create your business for success in the future? And then months that you were really profitable, you can look at why. But by looking backwards, we can start to look forward on where do we want to see our business go, right? Where can we put our energy to create those profits in the future? One other number that I want you to always know, and this is your average operating expenses by month. So same report, you're going to run your income statement by month for the last 12 months. And this is right before the profit or loss line. It's your total operating expenses. And this is really important as we start to look at other things in our business, like how much cash should I have in the bank? How much should I save in order to hire again? How much do I need in order to have saved in order to make the next investment in my business? You have to know what, on average, how much does it cost you to run your business month over month?
Okay, brilliant. And can I just say, I love how simply and clearly you broke that down. So thank you.
Sometimes I'm like, am I saying too many accounting words?
No, I hope you were all tracking there. I did. I thought it was a really brilliant and simple description and just so important because I don't know if you find this, but a lot of times I find people don't leverage the data that's available to them to make smart decisions. And instead they end up looking like bewildered at the end of the year. Like, I don't understand how I didn't generate more money. And it's like, and were you looking at or leveraging any of that information to make decisions and how you did things throughout the year? Do you find that as well?
Oh, it is. It is painful to watch so many people go through the same thing. And I really think that this is part of a money mindset. I had no idea. If you would have asked me 8 years ago when I came into entrepreneurship, I would have laughed at you if you said the word money mindset. I'm like, hello, it's money, black and white. This is what we use to make business decisions. But I was working in a corporate world where I was working with investors, private equity firms, board of directors. So it was just dollars and cents to them. When we're entrepreneurs, it becomes really emotional. And so we bring a lot of this emotion and overwhelm into our numbers. And unfortunately, as business owners, we think, I have to do everything myself. And so we forget to ask for help. Can you help me mine the data? Can you help me figure out what this is telling me? It's okay not to know how to data mine. It's okay not to even, like, I could have said income statement. You're like, what the hell is this girl talking about? I don't know where to find that. It's okay to ask for help, to say, I need you to help me look into the data. So yes, we see this all the time. And it is because we go into avoidance mode when there's something that we're not really confident in.
So true. So if somebody right now is listening and saying, oh, that might be me, or maybe I should look a little more often, how often do you recommend that people dig in and take a look at those numbers?
So I think best case scenario is a weekly dashboard. So our clients who are working with us kind of on our top tier package, they get a weekly financial dashboard that gives them more of a snapshot of what's happening through the month, right? So you're not waiting until the month ends. You're getting to see that picture and can react really quickly throughout the month. So cash, who owes me money? Who do I owe money to? What are my sales? What upcoming payments do I have, right? So you're able to really look at that information throughout the month. Next would be our monthly, right? So maybe you're like, Danielle, I'm not looking at this at all. There's no way in heck I'm looking at it weekly. That's okay, right? That's best case scenario. So maybe we start with a quarterly or monthly financial review. So next would be on a monthly basis. And if you still feel like that's too much, the minimum standard is quarterly. So we would like you to be looking at this information on a quarterly basis. We need to know what our estimated taxes are. We need to ensure that if we aren't paying into the IRS, that we know how much to be saving in a tax reserve account so that we are not surprised. Ladies and gentlemen, you are an entrepreneur. You are going to be filing your taxes in the spring. Don't wake up every spring surprised that you have to pay taxes. So let's look at the data on a quarterly basis so that we're prepared and ready.
Yep. And I think that's the key with the numbers, right? It just gives you data so you can make the right decisions in your business, which I know is something that you talk about a lot. And so, what are some of those key decisions or some of those key things we should be considering when we do look at our numbers?
Yeah, the numbers can tell you a lot. I mentioned a few of them as we were going through those top 3 numbers, but as we look backwards, right? So as we reflect on the history of our business, and that history can start with just the last 3, 6, 12 months, whatever you have accurate bookkeeping for. Looking backwards can tell us what worked and what didn't work in our business. So maybe you hired somebody to help you with some paid advertising and you spent a good investment in this activity, right? It was a risk that you took in your business. And so we can look backwards and see those expenses, and then we can see the results in our sales. And then those numbers can help us determine some other KPIs in our business, key performance indicators. So maybe we track the customer acquisition cost. So how much are we spending in advertising in order to bring customers into the door? So it's just looking at what's working and what's not working. Now, once we've seen that, we can start to use the information to make future decisions. So once we know that, let's just say our average operating expenses in our business are $3,000 a month on average. Well, now we know how much we need to have saved for a rainy day. So we always suggest for business owners to have 1 to 3 months worth of cash in their savings account. So now you know that your goal is to save between $3,000 and $9,000 so that you are prepared for a rainy day. If you get sick, if something happens, global pandemic, you know that you have 3 months worth of cash to protect you, your business, your contractors, your vendors, your customers. So those types of numbers can help us look into the future. Another scenario we helped with a client with last week was hiring decisions. We had a client who was looking to hire again. This was their second or third hire. So they weren't really comfortable with this risk. They're still new at this, but they knew that they needed help in their business, that they couldn't do everything. And so we walked them through, what would this look like had you had this employee over the last 6 or 12 months? What would your profit have been? Now let's look to the future. If they can take things off of your plate and you can generate more revenue, now we can look to see, can we afford to have this person in our business, or can we not afford to risk not continuing to have them?
Yeah, that's key. And I'm so glad that you touched on that, because that is probably one of the number one questions that I get asked when I'm helping people with planning. And because I do a lot around team, one of the first questions is, yeah, but when can I hire? How do I know if I can hire? How do I know if I'm going to get a return on the investment if I hire? So such an important decision to be able to make.
Yeah. And then even saving for it, depending on your risk tolerance, you might be someone who says, yeah, I want to hire, but I need to know that I have, maybe 3 months worth of their salary saved up. So now you know how much in average operating expenses you need, plus how much you need to save in order to hire, train, and equip your new employee, right? Don't forget, we need computers and maybe a payroll system. So it allows you, right? Knowing your numbers doesn't have to be scary. It can be empowering, right? Now I can confidently deliver and offer to this person and know that I can make them part of this community, this business, this family that you're building. But I can do that with confidence and accept them into this business rather than from a place of scarcity and fear.
Absolutely. Now, you touched on KPIs, and I'd love to dig a little bit deeper into KPIs. So, two-part question here is, one, what role do you feel like KPIs play, and are they something that's important? And then two would be, what are some of those top KPIs that you think are really important for a scaling business to be looking at?
So, there's a lot of buzz around KPIs and how to calculate them, and it can be really overwhelming for business owners to decide. I think there's a website, 1001 KPIs every business owner needs. Good Lord, you do not need 1,001 KPIs. Please do not put 1,000 KPIs in your business. I think it's really important to think about what is your intention for your business. So where do you plan on going in the next 3, 6, 9, 12 months, right? What is your intention? What is the season of your business? Now, once you've determined that, you can determine what KPIs are the best fit for your business. Now, maybe you're somebody who says, this year, I'm not scaling my business. This year, I don't need hockey stick double-digit growth. What I need is to take care of a sick parent, or I need to, have dinner with my kids more often and find some work-life balance. A KPI for you might be number of dinners with my kids per week, right? Or, right, so it's really matching the seasonality of your business to the KPI. So what gets measured gets managed. So if you're not measuring those things, if that's what's most important to you is work-life balance in your family, then we have to measure that so that we manage it. If what's most important for you is that hockey stick growth in your business and you're in a growth season, that's awesome. Let's find some KPIs that are going to help you find and track that hockey stick growth. It might be advertising and marketing dollars compared to number of clients in the door. Maybe you're hiring. So it's the cost of hiring, right? So the percentage of the dollars of payroll divided by your total revenue, and you're tracking those payroll dollars. Now, I want to say one other thing. KPIs don't have to be fancy. So I just gave you a whole lengthy process on how to find these perfect KPIs in your business. And if that felt overwhelming, I want you to delete that from your brain. You can ignore me, because there will be a season in your business that you're ready to hear what I just said. And maybe you're not ready. So you can go back to the 3 numbers I gave you at the beginning of the show: gross profit, net profit, and operating expenses. Those are 3 simple KPIs that you can get from your income statement that you can track historically and then in the future that are going to show you trends just the same way as all those fancy KPIs.
I love it. And can I just say, I'm so excited and so happy that you shared KPIs related to more of that balance and more of the things outside your business as well. I actually include these in my KPI dashboard that I share with clients, because I don't believe scaling needs to be, nor should it be, all consuming. I think you want to do it in a sustainable way. So we have things that I recommend that they track that are around how much are you overworking? Like, how overworked do you feel? How much, like, are you actually creating space in your schedule for things that are important to you outside your business? So I'm so happy that you actually brought those up, because
it could be your energy level, right? Mm-hmm. So every week on Fridays, you're just reflecting, how did I feel this week? What worked, what didn't work, right? So if I'm at 90%, well, what worked, what didn't work? I want to do more of that. Or maybe it's some health things. As business owners, we forget that we're people. So maybe it's, I want to go for 4 walks this week, or I want to make sure I eat a smoothie 4 out of 5 days a week. Like those other little things, just because they're not directly in our business. If I don't go for a walk, you don't want me in my business. My employees will tell me to go home. So, finding out those other things that are going to make you show up in the best way and tracking those, because that's what's going to make you a better business owner and a happier one.
Yeah, I agree completely. So I want to talk a little bit more about profit, because I know this is obviously what you're very passionate about. You wrote a book series on Profit Planner. So can you tell us a little bit more about the book series and what some of the key concepts are?
Yeah. So the Profit Planner book series is a 12-week planner to go through our top client questions and issues. We find that most business owners came into owning a business because you were really great at your craft. You really enjoyed doing something very specific. And it's generally not numbers, right? It's not bookkeeping and it's not accounting. Otherwise, you'd own an accounting firm like me. So that's a piece of it, right? Is how do we understand this area of our business in which we don't feel 100% comfortable? Now, when it comes to profit, I think it's really important. I've been using a strategy that I used in the boardroom back in my corporate days with our clients lately. And I want to share this here. It's called expense grading, is what we call it internally. When I worked as a CFO, so chief financial officer, one of the things that we had to do was on a quarterly basis, we would prepare this PowerPoint presentation with all of these numbers on, did we hit our budget? Did we hit our goals? Did we overspend, underspend? And the most important piece here is that we had to explain why. And so as I was working with our CEO and other areas of the business, marketing, sales, operations, I would have this conversation with them about why didn't we hit our numbers, right? What did we do right? What did we do wrong to overspend or underspend? And so by the time we got to the meeting, we had generally already cut a bunch of expenses out. We're like, well, we didn't need that. That was silly for us to have that in our business in the first place. Or we're underspending here because we're scared and we need to get more help in this area. So we need to spend more. And so the expense grading is really just going through, where have you spent money over the last year by vendor, and the total amount that you've spent for each of those expenses over the last 12 months, and then giving it a grade and an explanation. Don't skip the explanation. You can't give it an A in your business and say, yep, I have to have this, without explaining to you, the CEO, why you need that in your business. So you're explaining to you as management why you need to have that expense. Now, I promise you, as you go through this exercise, there's going to be aha moments of where you say, I'm not using that, or I only bought that because my competitor used it and they posted about it on Instagram, right? Or, wow, that contractor or that employee is really underperforming, right? So this gives you an opportunity to find profitability in your business.
I really love that. I think that's so good. And I think so often we just keep on trucking and keep on moving forward and don't take the time to pause and reflect and think about why. And it's sometimes pretty surprising.
It can be so surprising. And if you could do this exercise on a quarterly basis or biannual so that you're staying in tune with it, because let me tell you, it changes, right? Like, business changes, you change. And so you have to do this as a regular exercise.
So if we're thinking about sustainable profits, what are some of those things that we should be considering or looking for, or practices that we're putting in place so that we're actually building sustainable profit and not just this one-off kind of profit that's here one day, gone the next day?
Yeah. So we've talked about a lot of them, right? So let's not overcomplicate things. We need to be looking at our numbers on a monthly basis. So we need to make sure that we have accurate bookkeeping. So everything is being categorized correctly. We know that QuickBooks is reflecting the correct numbers back to us. Then we need to ensure that we're showing up as the business owner, the CEO, and reviewing that information. It doesn't do anything for you to go in and click accept in QuickBooks, right? That's not the work that you're supposed to do as a business owner. The work that you do is to review the numbers that your QuickBooks or your accounting software is telling you. So on a monthly basis, we are making sure that our QuickBooks is accurate. We're reviewing the information. We've chosen the KPIs that are most important for the season of business that we're in. We're tracking those KPIs historically and then moving forward. And then we're evaluating our expenses and explaining why on a regular basis. So decide, is that quarterly, biannual? Those things right there, it's not complicated, right? Sometimes we need to stop looking for the fanciest tool. We don't need another software to tell us how to do it. Sometimes we need to get back to the basics and just actually do the gosh darn work, right? Just show up and do it.
Yeah, keep it simple. I love that. Thank you for the very clear breakdown. I feel like that does make it sound just so manageable for any of you listening who maybe don't already have all those practices in place. Just listen for the gaps and see what you can do. So tell us more about your work and what you do, and if you have anything exciting coming up.
Yeah. So Kickstart Accounting Inc., we help business owners understand their numbers. So I mentioned bookkeeping needed to be accurate several times. And that's because, throughout my time working with business owners, we have found that we can't actually use any of the numbers because they're not accurate. And so my team and I provide bookkeeping services for entrepreneurs so that we can ensure that the numbers are accurate and then help you determine what those numbers are telling you so that you feel empowered and confident running your business, not operating your business from a place of scarcity.
Excellent. I love it. Now tell people where they can actually find you.
Yeah.
We'll learn more.
Yeah. Kickstartaccountinginc.com is the best place to go. You can book a call if this is something that you'd like to talk to about your specific situation. Come and book a call at kickstartaccountinginc.com. If you love podcast listening, which I know you are if you are here, we have our podcast, Entrepreneur Money Stories. And then I do want to share, we do have an expense grading worksheet. So if you really like that exercise, but you don't know where to start, you can go to kickstartaccountinginc.com/grades and download that worksheet. And it has a video to walk you through that as well. And then one other thing that's coming up that we're really excited about, we are launching our financial framework, which is a 12-week series that helps business owners work through money mindset, understand their numbers. So maybe you're somebody who's not ready to dive into needing bookkeeping support on a regular basis, but you need to learn more. This financial framework is a really great place to have videos, coaching specifically by myself and my team, and a place to share celebrations and issues and anything that comes up in terms of your numbers.
Fantastic. I love it. And of course, everyone, all those show notes will be down below for you. So go check out Danielle's work and all of the great things she has coming up. So I have one final question for you, and I can't wait to hear what you have to share. And that is, in your business, how do you work smarter, not harder, and keep things lean?
I lean on my team. This was something that I learned very early on in my business, was that I could not do everything, nor should I. I knew from day one that I wanted a sustainable business that I could be in for the long term. And that meant finding a life that I could live. And that required me to have a team. So at first that was contractors. Now we have employees. That has shifted and changed throughout the years. But in order for me to be able to work smarter, I need to have people who are smarter than me in my business.
Brilliant. Danielle, thank you so much for being here. There was just so much value that you packed into such a short episode. So appreciate you. I don't know about all of you, but I felt like I learned a lot today. So I hope you got as much value out of this episode as I did. I will see you again next week. Danielle, thanks again for being here.
Thank you. I appreciate it.
Thank you for joining me for another episode of the Lean Out Your Business podcast. I hope you got a lot of value and actionable insights from today's show, and would love if you take a moment to leave us a review. If you have any questions on today's episode or on how to lean out your business, join us over in our private Facebook community, where every week we do live training and Q&A, and I'd love to have you be part of the conversation. Head to leanoutmethod.com/group to join us. And before you go, be sure to subscribe to the show so you're the first to know when we release a new episode. We'll see you next week.